Welcome to Next in Tech, an S&P Global Market Intelligence podcast with a world of emerging tech lids. I'm your host, Eric Hanselman, Chief Analyst for Industry and Company Data at S&P Global Market Intelligence. And today, we're going to be talking about a set of reports that are coming out right around the time this podcast drops. It's our big picture report package that's coming out. It's a family of 6 reports that cover the whole swath of perspectives that S&P Global comes out with. It's fascinating data, and with me to discuss it are 2 of the analyst team, who are part of the authors for all of this, Melissa Incera and Iuri Struta. Welcome to the podcast to you both.
Thanks, Eric. Great to be here.
Thanks, Eric. Yeah, nice to be here.
Well, and it's great to have you. This is a huge project that brings together so many different parts of our data perspectives and so much that's out there. There are all of these different parts of the report that we're looking. It's as I said, it's basically the entire swath of our research capabilities. It's everything from capital markets perspectives, our commodities teams, the commercial real estate research, technology perspectives, M&A activity, supply chain. The thing about it, though, that just fascinates me is all of the interconnections of this data. I mean, it seems like there's this huge swath, but there is a lot that interlocks between all these different perspectives, a lot of these different things that have dependencies across them, and that the interesting parts are that we're going to start to see some of where those adjacencies are having influences across these markets. To start off with, and give our listeners a little bit of background, which of the reports that each of you were involved with. Melissa, you and I were working on the tech side of this.
Mm-hmm. Yeah, we were. So our report was centered around generative AI and how we're moving from hype to value in that market. Central trend of this year, as we saw organizations moving really from excitement and the promise and potential of Gen AI to really trying to wrangle some value out of it. And to your point, there are tons of intersections with several of the other reports. M&A, capital markets, which Iuri worked on and he'll touch on. The data centers and energy report is another area of big overlap where we're seeing major surges, projecting even bigger ones in demand for resources and energy, due in part to the demand to accommodate AI. So yeah, as you said, really some fascinating interconnections there that hopefully we can speak to today.
As we keep saying, it's all interconnected. But Iuri, which part of this were you working on?
Yeah, so I worked on the capital markets report and with a focus on AI investments. And an important highlight of our report there was the massive amounts of AI capex that is being deployed by the 5 hyperscalers or the 5 tech juggernauts, Meta, Alphabet, Amazon, Microsoft, and Oracle. So according to Visible Alpha, which is now a market intelligence company, these 5 companies are expected to spend about $1 trillion collectively on capital between 2024 and 2027. And the report goes deeper into these numbers. And obviously not all of that 1 trillion is going to AI, but probably more than half of it is going to data centers and chips, essentially.
This is the thing that I just find is fascinating about all this, is that we've got all of these interconnections of, you're talking capital markets, and all of this is so much of the capital spend that's taking place is going into building the facilities and then stocking it with all of the gear that's necessary. On the commodities side, one, it's all about AI. Again, if anybody had any questions about this, it's all about AI. And the commodities team is talking about the energy that all of this is consuming and what those impacts are on the grid, some of the perspectives there. Commercial real estate is touched by this. Mostly you and I on the technology side, of course, Gen AI is such a big component to what's taking place. M&A activity, there's aspects of this. You get to supply chain. You get all of the different aspects of both what's driving the componentry that's actually getting there. But we're also looking at some of the larger impacts that are happening. One of the touch points, water stress issues from a global perspective that are starting to impact supply chain pieces. I just find this fascinating web of how all of this is run together in terms of some of those perspectives. I don't know if both of you have seen similar kinds of links, but it just seems like so many of the different pieces touch each other across what, at least on the face of it, looks like a lot of disparate pieces, but a lot of interconnect between them.
Yeah, I'll say from the technology perspective, one thing we've seen over the past year is that there has been really no real shift in intent or appetite year over year as it relates to organizations. Specifically, we focus on the enterprise perspective, right? So there's been no real shift in intent or appetite in terms of the desire to adopt generative AI. In fact, the sheer number of organizations that are pursuing this is just increasing very consistently and steadily. And we're also starting to hit, as you and I touched on, as we see these organizations start to scale, start to move these projects into production, there's a real step change in terms of those demands, right? For energy, for resource. So the point being that the scale that we're talking about in all of these arenas, in capital markets, in energy consumption, in the need to build out infrastructure is just unlike anything we've ever seen before.
Yeah, it is. I mean, we look at other transitions, and of course, we look at from our side, from the voice of the enterprise, the Forefront Research from the voice of the enterprise data. We've looked at technology transitions like the shift to cloud and things like that didn't have this same kind of broad impact across so much across the planet when you really think about it. These are pieces in which there's just so much going on. And Iuri, to your point, when we think about what's happening in the capital markets side, you're talking about large volumes of investments. Well, what other impacts are you seeing, and what are some of the highlights in the report that you were working on?
Yeah, I think one of the most interesting things, if you look at this, hyperscalers that are, they have their main businesses that are it generates lots of cash. So they invest a lot of that cash into Gen AI initiatives. And what we're seeing now, investors, CapEx is a very watched metric among investors. And the higher it is, the better the investors perceive the stock. And if you look at, for example, at Microsoft's latest earnings, they came up with a CapEx that was higher than what Visible Alpha analysts forecasted. And the stock immediately fell down, even though Microsoft earnings it was a pretty good, decent report with strong growth in both earnings and revenues. But if you look at other companies in the AI value chain that do not have they can't fall on this cash generating businesses, they're increasingly tapping the debt markets to finance their operations. And if you look at, for example, CoreWeave, an AI hyperscalers, so this company recently raised $7 billion. If you look at Meta, which is one of the smallest from these hyperscalers, and they do generate a lot of cash, but not as much as other big tech giants. So they raised $10 billion recently in debt, and most of that goes to AI investments. And also, I think the impact on the debt markets it is already interesting and is going to be even more interesting.
Well, when you think about what's taking place, especially now, and we can debate what's happening with interest rates. Clearly, we've got some indications where the market thinks interest rates are going. Now, that means that from a debt perspective, that's not a cheap path. And yet, these are organizations that I guess see such a significant need to be able to fund these investments in capacity for AI. Hey, if you're a cash machine like a Microsoft, you've got that cash backing. But as you're pointing out, the market's really frowned on the level of capital spending. I guess it sounds like the markets are signaling that there are questions about when there's actually going to be payback in that level of capital spend.
Yes, that's right. And I think the only company that has already quickly sort of monetized the AI investment it has made, it's Microsoft. They said they're on track to have $10 billion in AI revenues this year. And this is because, they have a massive distribution network and they quickly leveraged OpenAI and produced Copilot and some other applications. And they quickly sold these products through their channels. But other companies, it's still murky where the ultimate return is. Meta is still unclear. They're making a lot of investments. Alphabet, they say utilization is very high for their applications, AI applications, but they haven't said anything on the monetary value of those applications or how much money they're making from them. And Amazon seemingly, they're not participating in the application layer. They're mostly in the cloud infrastructure.
It seems like there's going to come a point where the markets are really going to expect that there's going to be return on all of this capital spend. So I guess we'll have to see where that goes. Although you brought up a really interesting point and something that we've talked about on the podcast before, which is that you do have in the debt markets some very interesting activity that's taking place with some of the alternative GPU providers like CoreWeave and Vultr. And Melissa, that's something that we've talked about before. That's another one of these developments that I find fascinating when you start looking at how some of these deals are structured, where they're actually securing the debt with the GPUs that they're building out the infrastructure with. That's getting into some very interesting territory.
Yeah, absolutely. Yeah, it's interesting because I'll say, looking at capital markets, we continue to see a lot of hype. And Iuri, you can comment on this too. I know you track this probably more closely than I do. But when it comes to funding in these generative AI type companies, valuations are still astronomical. We are seeing companies that are coming out the door with a hotshot founder at the helm and raising funding at unicorn valuations within months of being announced. So there's still a lot of, within capital markets, my sense is that there's still a lot of disconnect between value delivered and valuations. That actually is starting to contrast a little bit with what we're seeing on the tech side, which is a little bit more practicality in terms of how businesses are approaching generative AI and implementing it in reality. I don't know, Iuri, if you have any comments on what's happening in the funding environment.
Yeah, I think most of the money that goes in the funding environment are for foundation models, and these are making a huge multi-billion-dollar rounds every 6 or 9 months. And even though most of these companies grow revenue at a very rapid clip, to keep up with the hyperscalers, which they have a lot of cash and they can invest. So to keep up, they need to raise ever more money, and they need to raise ever more they need to do bigger funding rounds to sort of finance the next generation of foundation models. And because some of these companies see this as a unique opportunity to establish yourself in the next technology shift. And the quicker you are, the better. So in their mind, it doesn't matter how much money we spend. What matters is that people use our products, people use our LLMs. And if you look at companies like Meta, they came up with the open source model, and this is their basically strategy. We're not looking for monetization soon, but we want to open source this and have as many people as possible use our model in the hope that it sort of, is going to become one of the few LLMs that's going to dominate the industry going forward.
Yeah, they're hoping for herds of llamas roaming the data centers worldwide.
Yes.
Well, and it's something when we think about where that really winds up. It's the funding has become also part of this, I guess, almost a requirement, it seems, for a lot of the strategic investors, because they want access to some of those. I mean, outside of open source models like Llama, they're looking to be able to get some level of connection with a lot of these early stage companies. So they're investing. Melissa, you got a wonderful map of how the strategics are placing all of these various investments. In many cases, actually competing with each other to try and get some level of advantage in terms of their connections with a lot of these fast-moving startups.
Yeah, and this is actually a dynamic that I think will be really fascinating to watch coming into the new year, given what's just happened in the US, particularly because we've seen an FTC that's been very aggressive over the last few years, probing into some of those investment stakes that we've outlined in the past, Eric. Hence why we've seen some very unorthodox non-acquisitions happening. So I'm sure you guys saw the news with Microsoft Inflection. AWS did something very similar with a company called Edet this summer.
Yeah, so not actually outright acquiring, because that would generate FTC concerns, but...
Exactly. Right. So like a hiring of all of the essential team, paying a nominal amount to help investors recoup their initial stakes. But I think with the head of the FTC likely to being replaced in the next few months, we might just see straight deal making picking up. And a lot of those players will probably be able to be a lot more aggressive about buying up market share, buying up capabilities in a way that they've been a little bit more hamstrung in the past.
Well, it probably handcuffed and hamstrung in some ways. But the thing I think that we can count on, I mean, there's a lot of speculation about what the new administration will bring, but in FTC, it seems like that's a pretty high probability.
Mm-hmm.
And to your point, that we'll have to see where that goes, but it does seem like that's an indication that, or there's a strong probability that deal making will really start to move forward.
Yeah, just to add on tech M&A, and this year it has been on a very slow recovery compared to last year. And most of the activity has been driven by private equity firms, and tech strategics sort of took a step back. And most of this is because of the FTC. Our data from 451 Research shows like the big tech, Magnificent Seven, or this type of companies, they were averaging like collectively, say 30, 40 deals a year, and up until like 2023. And in 2023 and 2024, this was down like to single digits and very small deals. So obviously, and you've had Alphabet that they wanted to make 2 acquisitions and they didn't make them in the end. A lot of people sort of, even the acquisition targets, are sort of afraid that this is going to drag out through the regulatory process, and you can have like 2 years with a lot of employees living in uncertainty and company not moving forward. And as a result, people or target companies say, no, we're not going to do that because we're going alone. If you can promise that a deal is happening in 3 or 4 months, then yes. If it's 2 years, we're not doing that. So yeah, I think with the new administration, we'll have to see what's happening, but it's definitely going to sort of bring some changes to the tech M&A environment.
And as we've been saying, I mean, these are all companies that are moving really rapidly and don't want to be slowed down by any deal scrutiny that might take place. There's a deal that makes sense for them and you can get it done quickly. Hey, great. But I guess we'll have to see where that shakes out. But in the meantime, there's a lot that's going on behind the scenes, especially on the technology side. I mean, also one of the things you and I have been talking about is really, you touched on it, but I wanted to point out some of the numbers on this. Just the speed with which organizations are advancing. The fact that over the 6-month span between our last 2 studies on adoption, we see a 5-point jump to what's now an 18 percentage point number of organizations that are identifying that they're actually full in on AI capabilities. They're actually starting to leverage them in production capabilities. I mean, that's just a pace that is eye-watering in terms of how fast some of this stuff is moving forward.
Yeah, absolutely. So as I was saying before, there's been no real decrease in intent or appetite year over year. We're still seeing businesses moving full throttle towards generative AI. But again, to the point about how are we getting from hype to value, there is, as I said before, a lot more practicality, a lot more stepping back, thinking about all the pieces that have to be in line to make this work, to actually derive value out of these systems and applications. What are the costs? What are the security implications? Are we compliant with regulations? Which I think is a very healthy attitude shift that we're seeing.
Wanting value for your technology investments?
Right,
Melissa!
Right. Outrageous. But to your point, I mean, we are continuing very full throttle. Businesses are progressing along the maturity curve at a very consistent clip.
But they're focusing, starting to raw shininess seems to be rolling off a little bit. And there is that useful trend, or at least useful to my mind, that organizations are looking to actually figure out what's actually going to be delivered.
Exactly.
One of the things, Eric, that I've noticed from your report is that even though like companies want to implement Gen AI technologies, a good chunk of them are not ready yet technologically or digitally. They're not mature enough from a digital perspective. Sort of, is this what you're also seeing? So that, they kind of need to first invest in their infrastructure and data and preparation for AI.
Oh, you're absolutely right. This is the challenge in all of this, is that real implementation of AI requires maturity in a bunch of areas of infrastructure that haven't been a focus area. It's a step up in the level of abstraction. You've got to get better at how you manage your data pipeline, and how just having data isn't enough. You need to understand how you're going to put it to work, what the quality of that data is, where the data is. There are a lot of other pieces that you start getting into about how you're going to cite it, which of the various facilities you're going to leverage. Do you have your own capacity, which the answer in most cases is no. And what's happening from capacity that's available to you either externally or working with partners to be able to develop. And that's its own piece. And that ties back into a lot of the data center availability pieces, because we can't build data centers fast enough. I actually am just back from the Enact Summit that's part of this last round of the UN's COP28 in Abu Dhabi, and talking about how energy providers are seeing this crazy level of demand. It's something we've talked about on previous podcast episodes. This was really a gathering of various significant participants in these aspects of the market who were trying to make sense of what happens. Can we manage what is this burgeoning set of AI workloads in ways that can reduce some of the peak energy demand? And we talk about that in the commodities report. We've got a lot of different pieces that all seem to be tied in from each different perspective. It's a lot of questions out there, but a lot of interesting data behind it.
Yeah, something that we fixated on, Eric, you and I, in the process of writing this report was how at different stages of maturity, organizations face different challenges or different concerns arise as it relates to infrastructure and digital readiness. So early on, we see organizations are really concerned with, as you mentioned, what state is our data in, right? Do we have a quantity such that we can work with it effectively with these LLMs? And then as you move into scaling and production, that's where we see things like data privacy arising. Can our infrastructure accommodate both present and future workloads? And actually, Iuri, I think you mentioned, so actually infrastructure limitations and infrastructure requirements are we find the biggest hurdle to being able to move up the maturity scale and actually move into production. So if organizations can't, and I know that's a very big category, infrastructure requirements, but if organizations can't invest appropriately or overcome those very kind of fundamental networking storage hurdles, those are real bottlenecks to being able to move through the stages of implementation. And then I'll also mention that the two most consistent challenges and hurdles across all levels of maturity that we're seeing rising as concerns just nominally year over year are security, which is a catch-all for all of the kind of the risks and threat surfaces that are exposed through generative AI, and also cost. The sensitivity around cost is rising across the board.
And it really wraps together a lot of those different pieces that organizations are trying to wrestle with. How do they manage it? How do they mitigate the various risks that are there? Because they are manifold. And can you really wrap this together in a way that makes sense from a financial perspective? As we're saying in the report, they're looking for value. It's not just that crazy dash to get this implemented, although there's no shortage of that. Well, it's a vast set of perspectives. I will point our listeners. I will have links in the show notes to the reports themselves. There is so much more that we don't have time to cover today because we are at time. But thank you both for being on the podcast. And there is so much more to discuss on this. So we'll have more episodes we'll have to dig into and a lot of the repercussions.
Thanks, Eric.
Thanks, Eric.
And that is it for this episode of Next in Tech. Thanks to our audience for staying with us. And thanks to our production team, including Sophie Carr, Veronica Deoshin, Kira Smith on the marketing events teams, and our agency partner, the 199. If you enjoyed what we're talking about today, be sure to subscribe on whatever podcast platform you're listening to. Give us feedback about what you'd like to hear next. We're coming up to our 200th episode. So if you've got ideas about what we should do, interesting ideas we should float, interested in figuring it out, I hope you'll join us for our next episode. We're going to be diving into a different aspect of data center markets, really looking at the marketplaces themselves, which are one more echo of a lot of demand, not just AI-driven, strangely enough. There's a lot that's going on in that. I hope you'll join us then, because there is always something next in tech.